Hey everyone, welcome back to my YouTube channel, Insurance and USA. It's me, Tikayo. So the topic for today's video is federal regulations of insurance in the USA. Nevertheless, federal regulation has continued to encroach upon the state regulatory system. The idea of an optional federal charter was first raised after a spate of solvency and capacity issues plagued property and casualty insurers in the 1970s. This OFC concept was to establish an elective federal regulatory scheme that insurers could opt into from the traditional state system, somewhat analogous to the dual charter regulation of banks. Although the optional federal chartering proposal was defeated in the 1970s, it became the precursor for a modern debate over optional federal chartering in the last decade. In 1979 and the early 1980s, the Federal Trade Commission attempted to regulate the insurance industry, but the committee voted unanimously to prohibit the FTC's effort. President Jimmy Carter attempted to create an Office of Insurance Analysis in the Treasury Department, but the idea was abandoned under industry pressure. Over the past 2 decades, renewed calls for optional federal regulations of insurance companies have sounded, including the Cram-Leach-Bliley Act in 1999, that proposed a National Insurance Act in 2006, and the Patient Protection and Affordable Care Act. In 2010, Congress passed the Dodd-Frank Wall Street Reform and Consumer Protection Act, which is touted by some as the most sweeping financial regulation overhaul since the Great Depression. The Dodd-Frank Act has significant implications for the insurance industry. Significantly, Title V of created the Federal Insurance Office of FIO in the Department of the Treasury. FIO is authorized to monitor all of the insurance industry and identify any gaps in the state-based regulatory system. The Dodd-Frank Act also establishes the Financial Stability Oversight Council, FSOC, which is charged with monitoring the financial services markets, including the insurance industry, to identify potential risk to the financial stability of the United States. An important artifact of the state-based insurance regulation system in the United States is the dichotomy between admitted and surplus insurers. Insurers in the U.S. may be admitted, meaning that they have been formally admitted to a state's insurance market by the state insurance commissioner and are subject to various state laws or governing organization capitalization policy forms, rate approvals, and claims handling. Or they may be surplus, meaning that they are non-admitted in a particular state but are willing to write coverage there. Surplus line insurers are supposed to underwrite only for the unusual or difficult to insure risk to prevent them from undermining a state's ability to regulate its insurance market. Although experienced insurance brokers are well aware of what risk an admitted insurer will not accept, they must document their diligent effort at actually shopping around the risk to several admitted insurers, typically 3, who will promptly reject it before applying for coverage with a surplus line insurer. To relieve insurers and brokers of that tedious and time-consuming core, Many states now maintain export lists or risk that the state insurance commissioner has already identified as having no coverage available whatsoever from any admitted insurer in the state. In turn, brokers presented by clients with those risks can immediately export them to the out-of-state surplus market and apply directly to surplus line insurers without having to first document multiple attempts to present the risk to admitted insurers. However, many states have refused to establish export lists, including Florida, Illinois, and Texas. By their very nature, export lists illustrate what U.S. insurers consider to be hard to insure risk. For example, the California export list includes ambulance services, amusement park, blasting, fireworks, displays, moving a building, demolition, and the hot air balloons, medical billing, product recalls, sawmills, scaffolding, security guards, and tattoo shops, as well as particular types of insurance like employment, practice liability, and kidnap and ransom. So, my video and my topics ended up here. Hope you like and enjoy this video and this information. We'll meet you soon for sure. Another video with some more discussion. Till then, just take care of yourself. See ya.